Bob Sinche is our guest. He's a global head of Forex strategy at RBS in Stamford, Connecticut. Bob, thank you so much for joining us. And we know that the dollar is headed for its biggest monthly gain since May. But you just heard people like, for instance, Sam Zell tell me a few minutes ago how worried he is about the dollar given what's going on in the economy and with the Fed and with the deficit. Who's right here?
Well, you know, we kind of think the dollar was less worse in the month of August, so we're not in the this was a stronger dollar month. You know, you look at the dollar index, the traded index, I think it's up about 2 or 3/10%, so really not much of a move. We think what really happened in August was U.S. interest rates, you know, 1, 2, 3-year rates were already at lows. And as the global economy looked a bit softer as we went into the third quarter, what we saw was interest rate expectations come down pretty hard in the rest of the world, Canada, Australia, Eurozone. So basically, interest rate differentials against the dollar were actually narrowing, and that gave us a little bit of a boost to the dollar. But in our view, this is not independent dollar strength at all.
Okay, so it's not about the dollar as a safe haven then?
No, really not in our view. You know, I don't think that people are looking at the dollar as a safe haven. Certainly there's an excess supply of dollars around. When the dollar really gained its safe haven status in our view was really during the post-Lehman crisis, when there was actually a scarcity of dollars in the global system. Hard to argue with the amount of liquidity that's been created by the Fed that there's a scarcity of dollars. So we think this was a bit of a temporary rebound. Other currencies coming off their highs, things like the Swiss franc in particular coming off its high against the dollar. But in our view, this is not independent dollar strength at all.
Then the dollar level right now, Bob, what is it reflective of? I mean, you know, does it reflect fundamentals here in the U.S. or not?
Oh, I think it does. You know, if you look at something simple like adding together the twin deficits, the current account deficit and the budget deficit, that measures at its all-time lows, which would suggest the dollar should be at record lows, and it is pretty much. The same thing with U.S. interest rates, low relative to rates in the rest of the world. Okay,
and quickly, Bob, before I leave you, tell me about your view on the euro.
You know, euro is rivaling the dollar for one of the weakest currencies in the world. Well-deserved also, as you know, as was just mentioned, European bank problems, concerns, capital certainly not moving into the Eurozone, probably except for some international flows from reserve assets and sovereign wealth funds, which continue to diversify a bit out of dollars into euros. But that's kind of the major source of demand for euros right now.
Okay. Bob, thank you. Appreciate it. Bob Sinche, head of Forex strategy at RBS Securities on the dollar and the euro.